just want to kind of set the tone for everybody as a long-term trading lesson, for lack of a better way of putting it. It is not a good long-term strategy to buy weak stocks, and that's the majority of the board that we have today. Could Apple rally $3 or $4 today? Netflix, Tesla, Facebook? Absolutely. Could you hop on board? Here's what's going to happen. If you don't, you're going to say, why didn't I? If you do and the stock rolls over, you're going to say that was a stupid trade. I know I've had that conversation 100 times with myself. How about you?
Right. Oh, no, definitely. And I'd say I agree with you. And also, I think in this kind of market, and we mentioned this last week, in these real volatile markets, trade the day. Would you say that, Pete?
Yeah, actually, you know what, Marion, that's a great caveat to the point that I'm trying to make. And essentially it comes down to is if you want to trade today long, to put, obviously to keep it in as much context as today as possible, that means that you are trading a different indicator to be long. That means that you are trading change from the open. That means you're trading change from yesterday's close, and probably is today's hour up or down. So essentially what you're saying is I'm trading for what's going on right now, which means that's got to adjust. I'm sorry for the poor English there. That means you must adjust your trade management and your trade expectations. So in other words, let's just say for argument's sake, we're looking at Facebook. That's a pretty popular one, right? So let's say for argument's sake, you normally give the stock $1 to fluctuate or 50 cents to fluctuate. If you're only trading based on the current hour, so let's say you're just trading these 2 hours here, like actually we did the other day, Marion, right?
Right. That's what we did the other day. In real volatile markets where we don't have any clear buys and sells, I think this is the safest way to, for want of a better word.
Yeah, absolutely. And I think this is a really important lesson because you can't go into the day saying, yeah, the stock is a screaming short, which Facebook might not be a screaming short. This one might not be the best example. Yeah. However, if you're going to drop down and only trade the intraday, so here's the open. Actually, let me pull that down here. Here's the opening price on this particular day, and the first 2 hours are trading higher. It's inside the previous day's range, so it's not above here, it's not above the previous close, that kind of thing. So you have 2 out of the 4 criteria. If you're choosing to drop down and only use those 2 criteria to be long because the weak stock is going higher today, this is the point of the whole thing. You first must recognize it's not a longer term bias. It's only trading today, which means your trade management means you must exit quicker and plan on being in the trades for a shorter period of time because you're just trading on the last hour's worth of price history. So can you do it? Yes. In the long run, is it a great trade to do? Well, there's actually, I hate to say it this way, but there's actually 2 answers. If that's your trading plan every single day where you're a scalper and you're just trading today's price action, there's nothing wrong with that. Your broker-dealer will absolutely love you for it. But if that's not what you normally do, you need to admit that's not what you normally do. And if the trades don't work out, pull the plug. Don't let it pull back 100%. If you're getting long here and the stock pulls back from 89 to 87.50 and you already had $1 in the profit, shame on you because this is a different trade. When you have much longer time frame continuity and much more in the trade that makes sense, you can give the stock a little bit wider swings. You can't do that when you're just trading right now as price action. Absolutely valid strategy. Just make sure that you recognize it's a different strategy than trading this kind of price action. 20s above the 50, they're both rising, good green candles, good good volume. That's not what you'd be trading today if you want to be long. Please type in. Let me know everybody understands that because it's very, very, just put yes or no in there because it's very important. I'll be more than happy to review it again, but it's a valid strategy. Marion brought up a really good point that, yes, you could drop down, but I want to make it a point that it's different from what we normally do. So you have to manage it differently. Again, if you're a prop trader, your broker-dealer will love you. Or even not. I guess if you're just trading actively, they will love you, right? So what would be the first area we'd be looking at today? Today, obviously, we'd be looking at yesterday's high in the SPY, right?
Right.
That would be the first level, which 194.77. And it looks like we're just below 194 right now. So you have roughly $1 to get to the first level. So if we, after yesterday's gap down, follow through and push higher today, let's see if yesterday's high comes in. Now, we actually discussed yesterday's trading a little bit, where we were looking at a 50% retracement level from yesterday's low. Actually, kind of do that again to set up a similar trade. I'll put it on the 5-minute chart because that's what we're looking at. The previous close down to yesterday's low, 50% retracement of that was 195.25. And in the 9:30 meeting, we actually said, all right, around 193, 195.25. Actually, you know what? I got it on pre-market here. I apologize for that. I'm basically what I'm trying to do is I'm trying to set up a trade for the open. So we had said that from this close to this low, 50% back was 195.25. So we just took a 50% Fibonacci level to give us an area to expect to look for a spot or a trigger to enter. Whether it was an inside candle, we happen to get a pretty clean topping tail here. That was the area. Now, it never got up there. And we also said that if it can't reach that level and we get a signal before that, that means that the previous move down, which in this case was the gap lower, is strong because it can't even pull back to the 50% retracement. So we got this level here. We never got up here, got this topping tail. We got all excited that how clean the signal was.
Right.
And then the target was obviously the opening price and the low, which happened to be the same. So this was a very quick, easy trade in the morning to make $1 in the SPY. So if you didn't get it yesterday, I just want to help you, if you're not joining us in the 9:30 meeting, how to set up what to anticipate. So basically what I'm saying is today's trade is yesterday's high, which obviously is up here at 194.77. And right now we're here just about $1 below that. If we push higher off the open, we're looking for this same kind of signal at yesterday's high to potentially put on a short sale at yesterday's high as resistance.